Hey traders, this is Ron at Market Tamer. Happy Monday. Hope your week is off to a great start. As always, everything in this presentation is for educational purposes only. We'll start off with the Dow ETF up about almost 0.5%. It's back above the 20-day. The day-to-day action goes back to the bulls. Remember, just watch the 50-day. That's the big line in the sand below 265. Then we come back down here, 254, 256 is the target. So of the three, the Dow looks the best. The one in the middle is the Spiders, SPY. It's below its 20-day, but it's above its 50-day in orange. So red's 20-day, orange 50, playing a little ping pong in here. Below 294-ish, then back down here to 285. Remember, that's the 100-point S&P drop or $10 in the SPY. Then the weakest of the three are the Qs. They were up 1% today. That sounds good, right? But could not get above the 50-day institutional moving average, nor are we even above the 20-day. This one's the weakest. Right now, the target would be down there, ballpark 182, maybe even down to 180. It's about a $2 window where those spike down lows are. Now, with the Q's not looking good, you'd think, maybe Apple had a tough day, but it didn't. Apple was up over 2.5%, finishing up there near 224, breaking out of its bull flag pattern. Here is the flagpole right there, and this is the flag right there. Well, today we just popped higher, and volume picked up a tad too. The all-time highs from a year ago back up just north of 230. There you have it, is the technical target right now. Some other retailers had interesting days. Here's Urban Outfitters, URBN, not something we look at a whole lot. But the low in August when the market was selling off, it also printed, you can almost call it, looks like an inverted hammer down there, sort of showing some exhaustion. Then we had some big volume come in. But we really wanted Urban to break that $24 right in there. It seems to act as resistance. Well, it didn't, but the 20-day held, gets up there again, 20-day holds. Then we finally spike higher, runs right up into some, I guess maybe a little bit of overhead supply, comes back down, this time breaks the red line but holds the orange, and now we just had two back-to-back days of launching. Right now, the major technical target is up at 34. We went pretty far, pretty fast here in just two short trading days, Friday and now here on Monday, what was that, 25-ish to 28-ish? But that's the target. Maybe something like a 20-day EMA could be used as a potential trailing stop. Nordstrom's had a nice little pop too. Again, if I actually go back to Urban, just 1 second, this is a very long left shoulder. Here could be the head and the right shoulder, which usually right shoulders are shorter anyway. And then the neckline break at 24. This one did play out where you had a quick, $3 pop. Well, if you go back to Nordstrom's and JWM, maybe left shoulder here, head here, right shoulder maybe here, or is this the right shoulder? You get the idea. But it has somewhat of an inverted head and shoulders pattern, and now we're starting to move higher. The difference here, though, is not a big spike in volume. If I had to pick Urban over Nordstrom's, I think Urban looks better. But nonetheless, immediate target 35, then the gap fill up here, what is that, 37, 38, and then back up here. But Urban's looking better technically. And then Bed Bath and Beyond, 3BY, long downtrend, 16 to 8, 50% loss in value, guys, in just 6 months this year, roughly. We get above the 50-day here. What day was that? Right around after Labor Day on 9/5. We push up, we pull back. Red line doesn't work as support, but the 50-day does, and now it's pushing higher. If it can take out 11, it'll again be putting in higher highs. And then frankly, 17-ish, 1650 would be the target. That's where maybe we have some more overhead supply, because otherwise it was just such a straight drop. There were no real big pause points. And then gold and silver were in the news today because of their big down moves. So here was GLD losing 1.5%. Interestingly enough, if I zoom in here, we opened the top left of that candle. You can see here the open was 139.77. We opened up there, closed down here. The fact that we opened below the 50-day and below recent support, that can often set up for a fantastic short bearish opportunity. I'm not a fan of naked shorts because of the unlimited risk, so it would have to be some sort of hedged position in case gold would reverse massively in a single day. But being bearish is my point. You gap below a horizontal support level, you gap below a major institutional moving average, that usually sets up for a great bearish opportunity. And it's super simple to see, and on this chart, it was easy to identify as well. Right now, downside targets, let me zoom out on GLD, probably 136 to 132. I mean, there's a lot of chop back in here. But the bulls, here's my point. Gold bulls on the daily chart, your edge is gone. It's over. You now have to regain the 50 and the 20-day to get back on the bullish side of things. The gold miners, they were down even more, 2.7%. They're holding that low from a couple weeks ago, 913. Maybe 26 can hold, spike high here, pause here, retest here, but then all the way back down into the June lows would be the target. Silver was down 2+%, broke the 50-day. It's already in some consolidation here, but 50 cents every single for like $2. Those are the support levels, every 50 cents. And here's SIL. It was down about 3+%. This one's a little messier. You know, there's a spike down here. There's some horizontal support here. Below 26, that's when it goes all the way back down to 22. That's a $4 move that might be more attractive than something from 28 to 26 because that's basically $2. There's a lot of chop back and forth. That's it. Not a whole lot going on. Markets are sort of just biding their time, waiting to see what's going to happen here one way or the other with something. There's a whole bunch of different events that could cause us to go up or down, but overall, bulls are hanging in there on the equities, but gold, the fear trade seems to be over, at least for now on the daily charts. That is it. Wish you guys all the best, and I'll see you in the next video. Take good care.